Apple has done it again. The tech giant has exceeded expectations for its second quarter earnings, posting impressive figures that underscore its resilience in a volatile global market. Despite ongoing trade tensions and looming tariff threats, Apple's revenue surged to an impressive $95.4 billion, surpassing analyst predictions of $94.2 billion. This strong performance is a testament to the enduring appeal of Apple's products and its ability to navigate geopolitical challenges. However, the shadow of tariffs looms large. Apple anticipates a $900 million impact from tariffs in the coming quarter, a stark reminder of the potential headwinds facing the company. CEO Tim Cook, while acknowledging the challenge, remained tight-lipped about the long-term impact of tariffs, leaving analysts and investors to speculate about the future. Despite these concerns, Apple's Q2 performance offers a glimmer of hope in uncertain times. The company's ability to deliver strong earnings amidst global trade tensions is a testament to its strategic prowess and operational agility. As Apple continues to navigate the complexities of the global market, its Q2 triumph serves as a reminder of its enduring strength and its potential for continued growth. The iPhone, Apple's flagship product, continues to be the crown jewel in its revenue stream. Despite a maturing smartphone market, iPhone sales surged to $46.8 billion, exceeding analyst expectations of $45.6 billion. This robust performance is a testament to the enduring appeal of the iPhone and Apple's ability to maintain its premium brand image in a highly competitive market. But it wasn't just the iPhone that contributed to Apple's Q2 success. Other product categories also witnessed healthy growth. Mac revenue reached $7.9 billion, surpassing expectations of $7.7 billion, indicating a resurgence in demand for Apple's personal computers. Similarly, iPad revenue climbed to $6.4 billion, exceeding the anticipated $6.1 billion, highlighting the continued popularity of Apple's tablets. While iPhone sales remain the primary driver of Apple's revenue, the consistent performance of its other product lines showcases the strength of its diversified portfolio. This balanced approach provides a buffer against fluctuations in any single market and positions Apple for sustained growth in the long term. Despite the positive earnings report, a dark cloud hangs over Apple's future tariffs. The ongoing trade tensions between the United States and China have cast a shadow on Apple's supply chain, threatening to disrupt its operations and impact its bottom line. Apple has already felt the heat, with the company estimating a $900 million hit to its earnings in the upcoming quarter due to tariffs. This looming tariff threat has raised concerns among investors and analysts alike, who are eager to understand how Apple plans to mitigate the impact on its business. While CEO Tim Cook has acknowledged the challenges posed by tariffs, he has refrained from providing specific details about Apple's long-term strategy to address this issue. This lack of clarity has fueled uncertainty in the market, leaving many wondering how Apple will navigate this treacherous terrain. The potential impact of tariffs on Apple's future earnings is a significant concern. If the trade war escalates, Apple could face even higher tariffs, potentially impacting its profitability and global market share. The company's ability to navigate these geopolitical challenges will be crucial to its continued success. In a bid to mitigate the impact of tariffs and diversify its supply chain, Apple has been steadily shifting its production away from China. One of the key beneficiaries of this strategic pivot is India, which has emerged as a major manufacturing hub for iPhones. In fact, during the second quarter, Apple sourced half of its US-bound iPhones from India, signaling a significant shift in its manufacturing strategy. This move to India is not just about dodging tariffs. It's also about tapping into the country's vast and growing consumer market. India, with its burgeoning middle class and increasing smartphone penetration, represents a significant growth opportunity for Apple. By manufacturing iPhones locally, Apple can potentially reduce costs, avoid import duties, and make its products more affordable to Indian consumers. This strategic shift to India is a testament to Apple's adaptability and its commitment to staying ahead of the curve. By diversifying its supply chain and expanding its manufacturing footprint, Apple is positioning itself to navigate geopolitical uncertainties and capitalize on emerging market opportunities. Section 5. Investor jitters. Apple stock dips despite strong performance. Despite exceeding earnings expectations and demonstrating resilience in a challenging global market, Apple's stock experienced a dip following the release of its second quarter results. Shares of the tech giant fell by over 4% after the earnings call, indicating some nervousness among investors, despite the positive financial performance. This dip in stock price can be attributed to several factors. The looming threat of tariffs and the uncertainty surrounding their long-term impact on Apple's business have undoubtedly weighed on investor sentiment. Additionally, some analysts have expressed concerns about the company's ability to sustain its current growth trajectory, particularly in the face of increasing competition and potential market saturation. While the drop in Apple's stock price reflects some investor anxiety, it's essential to maintain perspective. Apple remains a highly profitable company with a strong track record of innovation and a loyal customer base. The company's strategic initiatives, such as its expansion into India and its continued investment in services, demonstrate its commitment to long-term growth. Section 6. A year of contrasts. Apple's stock market roller coaster. Apple's stock performance over the past year has been a tale of two halves. While the company's shares have experienced a decline of 15% since the beginning of the year, they have also seen a significant surge of 25% over the past 12 months. This roller coaster ride reflects the volatile nature of the market and the various factors influencing investor sentiment towards Apple. The initial decline in Apple's stock price can be attributed to several factors, including concerns about slowing iPhone sales, the ongoing trade war between the US and China, and increased competition from rivals in the tech industry. However, the subsequent surge in share price suggests that investors are regaining confidence in Apple's long-term prospects. Several factors contribute to this renewed optimism. Apple's strong second quarter earnings, driven by robust iPhone sales and growth in its services segment, have reassured investors about the company's financial health. Additionally, Apple's strategic initiatives, such as its expansion into new markets and its focus on developing innovative products and services, have bolstered investor confidence in its ability to navigate challenges and maintain its position as a tech industry leader. Section 7. The AI race. Apple lags behind with Siri delays. In the rapidly evolving landscape of artificial intelligence, Apple finds itself lagging behind its competitors. Siri has long been criticized for its limitations compared to Alexa and Google Assistant. Apple's plans to revamp Siri with generative AI have faced setbacks. This delay raises concerns about Apple's ability to keep pace with AI innovation. Competitors like Google and Microsoft have made significant strides in integrating generative AI. Apple's lagging could impact its ability to attract and retain users. Despite challenges, Apple has the resources and talent to catch up. The company is investing in AI research, acquiring startups, and attracting top talent. However, translating these investments into competitive products remains to be seen. Section 8. Analyst whispers, concerns, and cautious optimism. The financial community has expressed a mix of concerns and cautious optimism regarding Apple's future prospects. While acknowledging the company's strong second quarter performance and its ability to navigate challenges, some analysts have raised concerns about the sustainability of its growth trajectory, particularly in the face of intensifying competition and potential market saturation. One key concern revolves around iPhone sales, which remain the primary driver of Apple's revenue. With the smartphone market reaching maturity, some analysts question whether Apple can maintain its current levels of iPhone sales growth. Additionally, the ongoing trade war between the US and China and the potential for further tariff escalations pose a significant risk to Apple's supply chain and profitability. Despite these concerns, many analysts remain cautiously optimistic about Apple's future. They point to the company's strong brand recognition, its loyal customer base, and its continued investment in research and development as reasons for optimism. Additionally, Apple's expansion into new markets such as India and its growing services segment offer potential avenues for future growth. Section 9. Navigating the global landscape. Apple's balancing act. As a global tech giant, Apple navigates a complex landscape. Challenges include geopolitical tensions, trade wars, competition, and evolving consumer preferences. Adapting to these challenges is crucial for success. Managing its supply chain amid the US-China trade war is pressing. Apple is diversifying its manufacturing to India and Vietnam. Tariff escalations and trade disruptions remain concerns. Maintaining innovation in a rapidly evolving industry is another challenge. Competitors strive to outmaneuver each other with new products. Apple must invest in R&D and attract top talent. Despite challenges, Apple has strengths for future success: strong brand, loyal customers, robust finances, and innovation track record. Leveraging these strengths, Apple can thrive in the years to come.